What's up, you guys? So to catch everybody up to speed, basically on this channel previously we talked a lot about keeper credit cards, and today I just want to drill this point home why it's so important to have your fair share of keeper credit cards, whether you're a professional credit card churner with like 20 plus credit cards or just a casual traveler just getting started, because doing this wrong could potentially cost you thousands if not tens of thousands of dollars. Chances are in the future you're probably going to be getting a car loan, a mortgage, or a new line of credit for your business. Well, unfortunately, the truth is if your credit score is low, that's going to affect your ability to get all of that. Or if you do end up getting them, you're going to have some crazy high interest rate, which means less money in your pocket every single month because you're going to be paying the bank instead, which means less money for coffee. So to make sure you get your coffee fix, we need to make sure you have a high enough credit score. And a very good way to keep a high enough credit score is to have your fair share of keeper credit cards. Keeper credit cards are cards that you're gonna keep forever. By the end of this video, you will know the 4 types of keeper credit cards and in turn which one you yourself decide to go for, in turn raising your credit score so when you do apply for that loan, you're gonna get that floor level interest rate, and that means less payments to the bank, more money in your pocket that you can spend on something you absolutely love rather than paying to the bank. So just by paying attention and stay until the very end, also implementing your own game plan, you're potentially saving yourself thousands and tens of thousands of dollars. And all I ask for is for a big fat like right over there. And also on this channel, we upload every single week on content of personal finance, sales, and entrepreneurship. So if you want to see more, make sure to subscribe with the bell notification. And I don't know about you, but I'm pretty excited. So let's get right into it. Just a little refresher here, 80% of your credit score actually depends on you not canceling your old credit cards. So just a little refresher, 35% of your credit score is payment history, so that's if you pay on time every single month. 30% depends on your credit utilization ratio, so what that means is let's say you had 100,000 of available credit to you and you only use like $10, that's gonna be really good for your credit score. Lastly, 15% is year of average credit history. The longer the better. Closing your credit card will without a doubt affect your credit score in a negative way. Although if you had it for 1 year, it's not that much of a big deal. But if you had it for say 5 or 10 years, I would never close that card, because closing the card will erase all that good history. It's gonna make your line available credit lower, let's say from 100,000 to like 50,000 or something like that, and it's gonna shorten your average age of accounts. For those that open and close credit cards often with the churning that's going on, what you can do is lower that impact that it does to your credit score by having a whole bunch of old accounts. You can think of this as a foundation to your castle, right? If you have a strong foundation, you don't care if a little paint chips off. You can easily repair it. So no matter if you do open and close accounts very regularly, or you're just ever planning to get maybe just a few credit cards, regardless, this will only do good to your credit score. Is that the only characteristics of keeper credit cards? Well, no. The second characteristic of keeper credit cards is that it offers you value year after year, way higher than the potential annual fee that you're going to be paying. So you can think of this as a jar that you put $1 in and $2 comes out by the end of the year. So you're going to be consistently getting value out of it year after year, which brings us to the number 1 type of keeper credit cards: no annual fee cards. Now, most banks offer no annual fee cards, and these credit cards, you literally have no reason to cancel it because it's no annual fees. You don't have to pay anything to keep it open. You can just let it build your credit score every single year. And a very good card, for example, would be the Tangerine MasterCard, which offers you pretty good value for a no annual fee credit card, which is by the way, a pretty solid card. The second type is value credit cards. So what are value credit cards? These are the cards that sure they have an annual fee, however, the value it provides is way higher than the annual fee that you're going to be paying. So in turn, for example, the TD Cashback Visa Infinite card, it has an annual fee, however, the value it provides with the high earning ratios, you're going to earn that back time and time again. And by the way, if you do have a account with the all-inclusive TD, you can actually waive that annual fee. Third type is hotel cards. So a good example of this would be the both personal and business Marriott cards. So these cards both have either a $120 for the personal or $150 for the business annual fee. However, just by holding on to these cards every single year, you get a 1 free night voucher at a Marriott property, obviously subject to availability, and also there's some redemption rules. But if you do stay at a Marriott property every single year, it does make sense for you to get one or both of these cards, because usually the value of the free night is way over the $120 or $150 that you would be paying. Lastly, we got the companion cards. So think of these as the hotel cards except for airplanes. However, they do have different characteristics. Good examples are the WestJet RBC World Elite MasterCard and the MBNA Alaska MasterCard. So both of these cards, or all of these cards actually, they have their own conditions, and generally speaking, they're harder to meet. The requirements are a little bit harder to meet than these hotel cards. WestJet card, for instance, has an annual fee of $119. However, every single year, you get one companion voucher. So what that means is, for example, when you book a round trip for yourself and paying full price, you can get another pass for your companion by paying a flat rate, and they will actually get the exact same fare you did, with the exception of business class. Depending on the destination, for example, for Canada and the continental US, you only need to pay $119, and for the rest of the world, you need to pay $399. Travel at least once a year with a companion. This is an absolute steal. Not to mention, if you do have a partner, they can also get the same card, and you can get 2 trips, for example, right? And you even get more value if you do decide to fly those premium cabins. So there's like a class called premium. However, this does not apply to business class, unfortunately. Alaska card gives you $121 annual USD with the annual fee of $99 Canadian. So at first glance, it's like a no-brainer pretty much if you do, again, fly with Alaska once a year with a companion. And although the value of this card is a lot easier to see, the WestJet does give you way more value in terms of redeeming it, because it's a flat rate for pretty much anything. It's kind of like the Aeroplan system. And other than that, both of these cards actually give you free check bags, which at a value around $35 per check bag on average. I would say that already alone pays for your annual fee. What do you need to know about these categories? Well, first things first, if you're not like a traveler or someone that sees themselves traveling at least once a year, I would definitely just go with the 1 or 2 option, the no annual fee, and this, it's pretty much the set it and forget it game plan. You just apply for the card, you get more value than what you spend, and you just forget it. But if you're feeling adventurous, or if you do travel a lot, definitely take the latter 2 options, because you get so much more value just going with those. Not to mention, they both have a pretty big fat sign-on bonus at this current moment. And lastly, consider your downgrade path. So what that means is, if you no longer want this card due to whatever reason, you can still downgrade it to a no annual fee credit card. So a good example would be these value cards. Normally these value cards can be downgraded to a no annual fee card, and you can just set it there and again forget it. Hope this changed your perspective a little bit about credit cards, because a lot of people I know, they either are really hardcore, or they're just like, oh, I just want to, get one card and never open a card again. But I just want to share with you, like, there is a middle ground, there is a way to kind of get a little bit of both worlds, right? Get a lot of value from these cards year after year, won't get you into trouble, save a lot of money in the process, and increasing your credit score in the process. So with that being said, you guys, thank you so much for watching. If you liked it, make sure to hit like, and also on this channel we upload every single week on content of personal finance, sales, and entrepreneurship. So if you're not yet subscribed, make sure to subscribe with the bell. And as always, have a great day. Peace.